Yo, what's up everyone? My name is Andrew Warren, and today we've got a pretty hot topic to talk about. I think it's going to be a big one that will affect how people view this market in the future, even aside from the positive green day that we've had today. And this involves the man, the myth, the legend, Warren Buffett. And I know a lot of you like Warren Buffett, including myself. I definitely think he's an investor to look up to. I don't always necessarily agree with his decisions, but I like the man, and I think he has a lot of good advice to give out to general investors that are either starting investing or for those out there that like the safer option of that long-term steady growth strategy. And he made a move recently and sold off a bunch of stocks that I think will definitely change the way people look at the stock market right now, especially from a famous investor that constantly preaches the buy and hold long-term high-quality stock strategy. So I have to admit that that aspect kind of makes me take into consideration, okay, what if we face one of the worst downturns we've ever seen in US history? And I can't lie, it's a thought in the back of my head. Even though I want to be positive about the market, I still want to be realistic as well, and I need to believe that it is possible to have a strong economic downturn for even more than a year. Now, as many of you all know, I'm a bull, but I also like to use a little bit of logic in addition to optimism. So I try to be a little bit realistic on how I think the market would react to certain news in our environment. And as you can see right now, with the Fed pumping in so much money and basically creating all of these loan incentive programs, the Fed basically has the market propped up right now, and it definitely seems like market manipulation is going on with them doing that, especially with the stimulus checks, the PPP loans, and you also have like so many people on unemployment. And although it's bad that they are on unemployment, some people are getting way more money on unemployment than they are their regular job. And I even know a lot of people that have found a way to, like, I guess, quit their job, not really quit it, but make it turn out as if they were fired. So they get unemployment, but it was almost like a voluntary way to do that. So people are basically quitting their normal jobs to get a payment that is higher than their normal average that they would get with their typical everyday job. I know people that get like $1,000 a week on unemployment, and that is no joke because there's so many other occupations out there that people are paid for that they do not get $4,000 a month for. So I do think that the unemployment is playing a different role that we did not expect. For one thing, it's bad to see a lot of individuals on unemployment, but then you think about, okay, they're getting this much money and that is stimulating the economy, just like with the stimulus checks out there. That's one of the main goals of the stimulus check, is to stimulate the economy. So maybe the market isn't being illogical, it's just focusing more on how it's benefiting the people currently. Like, for example, they're getting paid unemployment and it's stimulating the economy, and the stimulus checks are doing the same thing as well. So the market is focusing on the amount of people spending money right now. Even though there's a lot of fear out there, people are having easier access to loan programs and money that they wouldn't normally otherwise have access to, which therefore creates a lot of more people out there purchasing stocks for the future. But as I mentioned earlier, that all plays a role with the Fed and market manipulation and stuff like that, to where if they ever finally stop giving out all of these incentives aside from unemployment, then I think that will certainly make the market go into a downturn because they're no longer being propped up and reality is setting in. However, with that, I'm a super bull and I'm going with the flow right now. I'm dollar cost averaging regardless. I like the buy and hold long-term strategy. As you can see right here, I own only 4 main stocks that consist of around $76,000 in investments. So I choose my stocks very wisely and I keep it at a very minimum. So I honestly utilize a lot of that Warren Buffett strategy that I've been taught over the past few years. And I've noticed a lot of people say, Andrew, you don't have a lot of diversity in your portfolio. You need way more stocks than that. And my response to that is, no, you absolutely don't, because that is why I have VOO. Instead of me owning like 100 stocks or more to make sure that my stocks are diversified to sort of even it out if there were to be a stock market crash, I have VOO that does that same exact job, in which it tracks, I believe, around 508 of some of the most popular companies out there. So basically, I think this is one of the best options out there. And as I always say in these videos, anything that I say is not to be considered financial advice. It is simply just me sharing my thoughts and opinion about the market. But I think instead of someone buying a ton of different stocks and having like 80 stocks on their portfolio just for the sake of diversification, I think VOO is an excellent option for doing that, and then it slims down your portfolio to where you don't have to track 90 different companies and see if they cancel dividends and see if they're just no longer looking good for the long term. So that's why I have VOO, which is a pretty reliable source for about 10% gains every year in growth. Definitely a safer investment, but it is good for the people out there that just want a simple, reliable stock that they don't have to track constantly or sell it eventually or something like that. I think VOO is a great stock to hold until retirement. But then when I have diversification like this all in one stock, it gives me more chances to focus on a purely singled out stock that I think would be an advantage in my portfolio in terms of long-term growth and is a high quality, consistent stock that may also have dividends as well. I don't keep dividends as my main indicator as to what I should purchase. It's mostly focused on growth, and I often prioritize growth over dividends. I think that's absolutely the way to go. But I do have one holding that is Tesla that does not offer dividends. So basically VOO is all of my diversification, and then the other three stocks, Microsoft, Apple, and Tesla, are ones that I think that I can hold long term until I retire that will grow consistently for me in the future. I think Microsoft is probably the best long term stock that I have, maybe other than VOO. Apple is pretty solid as well, and then Tesla is a little bit more speculative, but I think it's one of those industry disruptive stocks that is revolutionary. I think it will revolutionize the whole automotive industry. So stocks like that perform especially well when they revolutionize a sector. I think this will be a multi-$1,000 stock easily in the upcoming future. But anyways, I'm emphasizing all of these stocks that I own and my simple 4-stock portfolio because it kind of does follow Warren Buffett's way of thinking when he talks about buying and holding long-term stocks. There's a lot of popular famous investors out there and performed very well by simply just holding a few stocks, and in my opinion, especially when you have good choices out there like Microsoft that gain about 40% every year, when you focus less on purchasing a wide variety of stocks, it gives Microsoft a bigger influence on your portfolio. So when it's doing especially well like it consistently does about every year, then you can count on a higher increase with this stock and a bigger change to your portfolio that, in my opinion, could help you beat the market. So for one thing, I have VOO to stick with the market and pretty much give me that average return every year that the market gets. And then I also have these three other stocks that are maybe a little bit more risky, but in my opinion, they are safe in other ways as well, that I think will help me beat the market in total once all of the values of these three are added together on top of the value of VOO, which is the safer stock. So in my opinion, worst case scenario, as long as these stocks do better than VOO, I can beat the market. But anyways, that's just some of my logic and thinking with my portfolio that I think applies a lot to the Warren Buffett ideology. But anyways, right here, as you can see with this article from CNBC Business, it says Warren Buffett's Berkshire Hathaway sells majority of stake in Goldman Sachs. And as you go farther down into this, it says Berkshire Hathaway sold 84% of its stake in Goldman Sachs during the first quarter, according to a regulatory filing. And by the way, this article was released on Saturday, May 16th, so just this past Saturday. And just to break down this sell-off further, it says that it slashed its holdings in this investment bank, which is known as Goldman Sachs, to 1.9 million shares from 12 million shares, according to the SEC filings. And it also mentions that the share price of Goldman Sachs fell almost a third just in the first quarter. And it mentions that Berkshire Hathaway is still a major holder in American Express, Bank of America, PNC Financial, and then Wells Fargo, of course. And just to share Warren Buffett's logic behind all of this, he stated that he thinks the overall banking system is not going to be the problem during the pandemic, but that if economic difficulties do become severe enough, that even strong banks can be under a lot of stress, but that he's thankful for the Federal Reserve System. So basically the Fed, the one that's been keeping the market propped up so far. And also, by the way, if you just aren't up to date on his recent sales as well, in addition to Goldman Sachs, he also sold every single bit of their stake in airline carriers, including American Airlines, United Airlines, Delta Airlines, and Southwest Airlines, which included more than 80% of U.S. air travel. Berkshire Hathaway was also one of the 3 largest shareholders in the 4 airline carriers, it says. And Warren Buffett actually mentions here, he kind of admits that he made a mistake on his part. He states, "It turned out I was wrong about that business because of something that was not in any way the fault of 4 excellent CEOs." And as it says right here, Warren Buffett's Berkshire Hathaway has a record $137.3 billion in cash right now, just at the end of the March quarter. So that means that they have around $137 billion waiting for a purchase opportunity And with Warren Buffett's recent sale of Goldman Sachs, then it means that they are trying to accumulate cash and take advantage of what they believe is the market being way too overvalued right now. If Warren Buffett is selling, the person that preaches buying and holding long-term and only selling in retirement pretty much, if he is selling stocks, then that means that he thinks the stocks are overvalued right now and are due for a fall in the near future. And it sort of hints at the idea of a recession as well, especially if Warren Buffett is cashing out and also admitting that his investment plays were wrong. Then for one thing, to me, this tells me that I don't think anyone should take, including Warren Buffett or anyone out there, you can't really take someone's opinion or a certain individual's thoughts and assume that they will always know the right answer. Like, I know Warren Buffett, he's always going to be that famous dude that I like, but it also doesn't mean that you can't disagree with his plays and his moves in the market as well. Like, for me, that was one thing as well. I really didn't agree in his airline purchases. I just didn't think airlines were very profitable long term, since I like to hold things long term. But it seems like this whole situation is maybe kind of a warning or a cautionary tale that if Warren Buffett is selling at what he thinks is a good time to sell, and especially if he's selling airlines at a loss, for someone that preaches buying and holding long term even through the crashes, I think it is kind of a cause for worry out there, or simply just a cause for caution for people that especially look up to Warren Buffett and kind of have that mindset. But in my opinion, I'm still going to be that person that is always investing, dollar cost averaging, buying and holding for the long term. And just for pure curiosity's sake, we'll go ahead and look at Goldman Sachs. I think it's positive today, but when I saw that article on Saturday, I thought there would be a huge drop. But as you can see with the markets currently, it pretty much saved the news of Warren Buffett's announcement. Yeah, so VOO is up 3.61%, and this is just a little under double that. So Goldman Sachs actually did a tremendous amount of growth today. However, in my opinion, I think Warren Buffett's choice to sell these stocks, for the one thing, I think in the first place, this wasn't a really good investment. I often look at the 5-year chart for stocks that I'm interested in purchasing, and if they don't offer either at least 50% in 5 years with around an average of at least 10% growth every year, then I simply just buy VOO instead, and I say, okay, this is not a good stock for me to purchase long term, because I can easily get 10% average in gains every year with a stock like VOO, since it does all of that diversification for me. So if I'm going to buy something other than VOO, it has to, for one thing, grow more than that, and for another thing, be a growth stock that represents tremendous growth consistently over the past 5 years if it is worth the risk of me getting something other than VOO. And with that, Goldman Sachs doesn't even pass that qualification. Even at its very peak right before the crash, it's only up 23% for the past year. And if you look at the peak before the crash for VOO, it was up way more than that. It was up like 60%, I believe. Yeah, 59.42%. So if I can't get that with Goldman Sachs, then I would rather just buy VOO or a growth stock like Microsoft. That seems to perform even better than that. So in my opinion, even I use the same logic with like Delta Airlines and American Airlines. I feel the same way towards all of these stocks. I think maybe, especially Delta Airlines, maybe this is a good idea to purchase for rebound gains, but in terms of long term, once it finally hits this baseline marker, it's not really going to grow much more than 10% a year. And as you can see with the peak before the crash, it was only up 25.35% for the past 5 years, and that's not even an average of 10% growth every single year like with VOO. So once again, Delta Airlines is not even worth purchasing for me. But I do have to admit, maybe it's just a tiny bit attractive for a short-term play for that rebound gain. But other than that, I don't think that Delta or a lot of these other airline stock companies, I don't think they're good for holding long-term. But definitely short-term plays maybe, just because of the money that can be made based off of the rebound from that low point to the baseline. But anyways, I did think it was interesting to see Goldman Sachs not go into the negative today, especially given the news on Saturday. I know when Warren Buffett sold airlines, like some of the airlines were like down 10%. So to see Goldman Sachs positive today is definitely a surprise, but like I said, I still don't think it's a long-term stock that is worth holding for the next 40 years or until your retirement. So there's nothing really attractive about this. So I think that Warren Buffett made a good decision on selling those stocks, but I also think that he shouldn't have bought them in the first place. But that's honestly just my opinion on it. I know everybody else has their own opinion on airlines and stocks like Goldman Sachs, But I just thought I would share this video with you all, and if you did enjoy it, please make sure to smash that like button, drop a like on the video. It really does help me out, and it helps me be able to do future videos like these as we get more and more viewers that start to watch, which I have to admit is motivating. And also, if you would like to begin investing, feel free to use my referral link to Robinhood and Webull, and if you sign up with my link, we'll both get some free stocks. I actually just sold some Caesars Entertainment today for about $11. That was a free stock, so that was pretty nice. But anyways, I hope you all enjoyed this video, and I hope you have a fantastic rest of your week.